usually, like we did in Q1. But it was just like more of a warning. It's like, okay, Bitcoin's at 90,000. It was, as you said, like 70,000 a week and a half ago, or even like low 60,000 a week and a half ago. Don't get over your skis here. And, if you've got leverage, this might be the time to take it off. I don't have a great answer. I can't quantify, but for instinctively, I would say it goes pretty fast once you start getting into the banana zone, as it's called. Yeah, it can move pretty fast. I mean, where are we relative to the last cycle? We're in Q4. There's been an election. It was 2020 last cycle, Q4, that Bitcoin had broken the high, and through Christmas, it just ripped. And it probably, I'll get these numbers wrong, but from memory, it was 30,000 by Christmas, so it done 50% on the all-time high. At that time, have we done 50% on the, no, we've done 25%. So like for like, maybe it's 110, I don't know, something around then. And then, within 5 months, it had basically peaked. After that, it was May. So I had a view that Bitcoin would break, it would probably run to 100,000, and that would be the trigger for an alt season. But I also made the point in the research, especially in the last couple of reports where I was doing projections, because in order to project the total market cap after you've projected Bitcoin, you have to assume what you think Bitcoin dominance will be. It's just backing out Bitcoin first and then saying, okay, if Bitcoin dominance is this, then the rest of the market would be roughly worth, X, Y, Z.
Bitcoin dominance is about to hit 100%. Jamie Coutts shares bold predictions for the next bull run, from nation-state mining strategies to ETF launches. With Bitcoin potentially topping $189,000 by 2026 and DeFi's rise on the horizon, this is a must-watch for crypto enthusiasts. Plus, how macro liquidity trends could reshape the market. Let's dive in.
It definitely hasn't changed. And I think the price move that we've seen is 100% to be expected. I mean, no one has a crystal ball, but when you get a resistance level which extends 4 years back, essentially, so we had obviously broken the high back in Q1, but it was pretty much a failed break. And then we traded lower. So 4 years of essentially touching a resistance level and failing each and every time, always in TA and in markets, once it breaks with really high velocity. And that's exactly what we saw. We saw, all the built up shorts and all the derivatives positions around that top, because you have a built-in expectation and market belief that it won't break, all have to be unwound very, very quickly. That just adds fuel to the upside move, and you get this really strong high velocity break. So some of the framework that I have catches things on a more short to medium term, like the momentum of these things. And DXY above 106 is not generally good for risk assets. Yields rising is not good for risk assets generally. The Treasury Volatility Index above 100, it was as high as 130 recently, is generally not good, because that's a collateral of the entire financial system. And so I just pointed out that these things are still they're not coming down, or they're not moving the way that we would like them to. And we started to see perps funding rates get as high as 40%, which is not as high as they can go. And it's only 1 or 2 days, and these things can sustain themselves for weeks, usually, like we did in Q1. But it was just more of a warning. It's okay, Bitcoin's at 90,000. It was, as you said, 70,000 a week and a half ago, or even low 60,000 a week and a half ago. Don't get over your skis here. And, if you've got leverage, this might be the time to take it off. So we looked at the sort of relationship between tops in global M2 and Bitcoin, and it looks like, Q3 potentially, if it's just a normal cycle. So global M2 would probably top early in 2026, and Bitcoin always tends to top before because it detects the rate of change, the slowdown in global M2. Once you start getting into the banana zone, as it's called, it can move pretty fast. I mean, where are we relative to the last cycle? We're in Q4. It's been an election. It was 2020 last cycle, Q4, that Bitcoin had broken the high, and through Christmas, it just ripped. And it probably, I'll get these numbers wrong, but from memory, it was 30,000 by Christmas, so it done 50% on the all-time high. At that time, have we done 50% on the, no, we've done 25%. So like for like, maybe it's 110, I don't know, something around then. And then, within 5 months, it had basically peaked. After that, it was May. So it can be, it's usually fast.
Jamie Coutts foresees a game-changing bull run fueled by nation-state Bitcoin accumulation and the impact of ETFs, pushing Bitcoin dominance to a staggering 90 to 100%. He predicts a peak price of $189,000 by 2026, coinciding with global M2 liquidity reaching its apex. Meanwhile, DeFi and infrastructure sectors are poised for a breakout, benefiting from favorable regulations and undervalued opportunities. However, gaming tokens remain underwhelming despite promising developments, with new projects like Sui and Avalanche's ventures stirring curiosity. On the macro front, rising global M2 liquidity and central bank actions hint at potential tailwinds for crypto. Stick around to discover how these trends and Coutts' insights could shape your next move in the market.
So I had a view that Bitcoin would break, it would probably run to 100,000, and that would be the trigger for an alt season. But I also made the point in the research, especially in the last couple of reports where I was doing projections, because in order to project the total market cap after you've projected Bitcoin, you have to assume what you think Bitcoin dominance will be. Like it's like just backing out Bitcoin first and then saying, okay, if Bitcoin dominance is this, then the rest of the market would be roughly worth, X, Y, Z. Bitcoin dominance should fall, starts falling relatively soon, but I don't think it's going to fall back to the levels that it has in previous cycles. So, and that's just because of the things that you mentioned. Like we have now sort of teleported to the next layer of the financial economy, which is the very top. It's the crescendo. It's the sovereigns, the nation states, and so they're now. I've said that they've been buying since last year. I wrote a report 2023 saying the nation states were already accumulating Bitcoin, and it wasn't wild speculation. You can just look at nations who are mining Bitcoin, who have sovereign wealth funds, and whilst they're not saying anything publicly, just from a sort of common sense approach, they have some of those virgin Bitcoin that they're mined on their own balance sheet in their sovereign wealth fund or one of the entities that they usually run. But there's also probably other nation states that have also been acquiring, and now you've got not 5 countries, but I think 11 countries who have got state-sponsored mining operations. Like this is a global industry now, the mining industry that is, which is like so exciting because it just blows out the arguments that we've heard for the last decade about Bitcoin's carbon footprint and how it's terrible for the economy, it's going to boil the oceans and all that jazz. So now you've got a whole new type of buyer in the marketplace. So I just think that Bitcoin dominance is probably, at least on my measures, it's around like 64% at the moment, 65%. On TradingView, it's like, as you said, I think 60, 61. In my model, I think it probably drops to around like 53, 55%, if I remember correctly what I said in the last report. In previous cycles, it dropped to 40. So that's where I'm sort of arriving. I'm pretty middle of the road. What I should have said earlier is one of the reasons why that Bitcoin dominance is as high as it is and has continued to climb is just because of Ethereum. Because there's 2 assets in this asset class, and Ethereum's now like 25%. Used to be a lot more of Bitcoin market cap or thereabouts, but like Ethereum's underperformance or lack of participation really in this rally is the main reason that it's Bitcoin dominance is where it is. You've seen some really good performance from a select few, what I call high quality alts like Solana and some of these other L1s that done okay. But yeah, so in order for Bitcoin dominance to fall, you're going to have to see the smart contract platform more broadly really start to participate. Meme coins they're already showing that they can do their own, Bitcoin dominance or a rising Bitcoin dominance market, meme coins are outperforming. So they're kind of like their own pocket. There's a cultural aspect to it there's definitely ways to trade that I haven't mastered or even had the time to really look at, but it's sort of like somewhat independent at this point. But in order for really meaningful changes to Bitcoin dominance to take place, so like you have to start seeing the smart contract platforms, namely Ethereum has to get its act together and start rallying. I think it's going to do it. I think Ethereum is setting up for pretty good 9 to 12 months here. All the different sectors and use cases within crypto. There's lots of different use cases, but the one that has got the strongest product market fit undoubtedly is DeFi. So you can throw stablecoins in there. Obviously that sort of leads everything, but like borrow lend, decentralized exchanges, whether it's for spot or whether it's for perps, are absolutely crushing it. Like if you look at volumes of decentralized exchanges versus centralized exchanges, they've actually been increasing for a while now. So the market share is increasing, which is a very constructive sign that people want to trade inside the ecosystem on chain applications, and they're getting better and better. Like you look at what Solana's doing in DEX volumes now, sort of overtaking Ethereum, and then you've got like Sui and Aptos and these other chains that arguably have like the most robust programming language for complex DeFi activities. It looks really, really strong. And then you throw in the fact that TradFi are going to tokenize everything, and you're already starting to see BlackRock products collateralize DeFi protocols. Then the big one will be like, okay, when will some of these TradFi companies spin up an L2 or create a soft fork of an existing DeFi protocol, or have a guarded KYC version of an Aave or something like that, and the space will absolutely explode. Like the volumes will just increase over time. So I'm really bullish on the space.
Jamie Coutts' insights are a gold mine for anyone navigating the crypto space. With Bitcoin's dominance poised for historic highs and DeFi gearing up for a major surge, 2024 could be a game changer for the entire market. As global liquidity rises and macro trends start to favor crypto, the path to Bitcoin's $189,000 peak is looking more plausible. But with potential market stress on the horizon, will these predictions hold true? Stay tuned for more expert interviews and in-depth analyses that will keep you ahead of the curve. Don't forget to subscribe, because your next big crypto move could be just one click away.